initial observations, there was a steep sell-off from June to July. The final major drop on the last day of June displays some familiar characteristics, especially for these kinds of reversals, without even looking at the ATR value or measuring the final major drop. There is a noticeable spike in volatility compared to the days before and after, when the overall trend was decreasing volatility. In this case, it also meant the general weakening of the downtrend. In the short term, this reflects changing market sentiment towards a brief period of indecision seen in those first few days of July. Then, while ATR remains generally unchanged, we get an indication of stability during the switch to an uptrend, where the trend develops more gradually, with mainly smaller fluctuations from day to day. The third trend we look at here is another downtrend. It combines characteristics seen with the past two trends and reversals. Like the second trend, movement is overall more gradual. This can be seen in some parts of the trend where price trades into tight ranges for brief periods. Another overall drop in ATR during this time indicates something similar in that the average change in price from candle to candle was smaller. However, similar to that last day in June, brief spikes in ATR show instability and much more rapid movement similar to the first trend. Now let's see how ATR can be applied in this situation as price is falling and flattening onto the 1880 level, which is turning out to be the focal point of a well-defined support area. Nearing the end of October, there's one of the first closes under 1880, but it's not a decisive break. From the standpoint of ATR, which is rising, some of these drops and even closes under 1880 are close to matching ATR values as they are slightly lower or higher. But even if the ranges of some of these price fluctuations during the contact under 1880 are higher than peak ATR values around 1.5, they don't meet common benchmarks to be considered strong movements, such as being double or even triple the ATR value. This can't even be achieved when the range of the drops are combined over several days. Upon contact with 1880, the chart became more neutral to bearish. Then progressively, selling has been maintained at moderate to high levels to only produce relatively weak drops in price and producing peak ATR values that are still around 1.5. With this drop and close back under 1880, the situation is still similar to the last few times. It can be called a drop of medium strength since it is above the ATR value, but it can't be considered a strong decisive break from the perspective of common ATR criteria, where a price change reaches at least a range twice that of the ATR value. Since some of the highest ATR values hover around 1.5, let's use that round number and double it to 3 to define the minimum criteria of the range price must fall to be considered a strong and/or decisive break. If the criteria is set to be more strict, it could be a range of 3 from one closing price above 1880 to the next closing price below 1880. This is of course not met. However, using less strict criteria, such as defining the drop over several days, then this can be considered a decisive break. Some other loosening of criteria could also include drops that include intraday lows of the candles rather than the closing prices, or defining the $3 range from 1880 $3 down to 1580, and then call it a decisive break once price crosses under that 1580 threshold over the course of several days, rather than the less likely situation where, in the course of one single day, price drops $3 or more to go from being above 1880 to trading or even closing under 1880. Less restrictive criteria can be beneficial in situations like this, where a decisive break is more gradual, with daily price fluctuations at or above ATR values, but nowhere close to being double or triple the ATR within the short time span of one single candle. In addition, trading volume can also be somewhat deceptive, as it might not match up with the ATR movements or price movements. Watching the last few weeks before the beginning of 2023, volume isn't always at exceedingly high levels, even during the decisive break under 1880, though it is consistent enough with consistent days of red selling. Then into the start of 2023, ATR continues to fall and price movement is stable overall from the perspective of ATR because daily price fluctuations are normally at or below what the ATR is showing. Though in relative terms, when looking at the percentage change in price, these are actually some enormous movements of falling price. In some respects, the ATR does a good job in terms of reflecting the stability of the trend and short-term periods where it slows down. However, the ATR does a poor job in reflecting relative movements as seen with these large percentages again, where the percent change in price is relatively large during these volume spikes. Then reviewing back here, another observation to be made is the difficulty that can sometimes be present during continuations such as this. Rising volatility that is reflected by the ATR does make it a challenge to identify and more precisely define a decisive break, because that initial increase of volatility can place attention on a wider area. That is then highly contrasted, especially in situations like this where a downtrend proceeds with a more gradual break that at first glance would seem like a slower gradual movement. This could be the case to some extent with the absolute numbers of the ATR falling, but in terms of relative movements, in terms of the percentage changes in price can actually be increasing in some instances. Moreover, it can also be helpful to look at what's happening with volume when ATR is relatively flat.